Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, January 2nd, 2019. Happy New Year, everyone. I am taking a look here at the daily time frame of the ES right now, and while the market has had quite a bit of setting pressures in the last quarter of the year, we have now cleaned out those early lows from last January and February, taking them out, driving through those lows and into the 2300 LVN. That's a major LVN we talked about that may need to be tested, and when it was tested, we had quite the reaction back toward those lows. So we are now testing those lows from below and bouncing down just a little bit here. Now this is very, very important, is the 2529 level, because any ability to re-establish acceptance above that zone can open up at least a short-term pop back toward 2700 and 2703.75, that key midpoint. Right now, you obviously see we have the 1219 FOMC key level to return back to. Anytime you have that type of FOMC key level and you see the immediate move away from it, whenever you find a strong low, you tend to come right back to that level. So again, we could be looking at a bounce at least back toward 2586s if price can withstand a pullback of some sort here early on. So again, after this early rejection down here, we could be looking at some sort of pop back up. Any failure to hold 2400 could suggest much more selling pressure ahead. We got to continue to just let this play out and see how much more selling pressure are we going to see ahead, or have we found a fairly strong low that could bring us back toward 2700. So that's going to be what we're looking out for here early on in the session and in the new year. If we take a look here at the NQ, you'll notice a similar bounce and reversal as well. This one took out the lows of the year here late in December heading into January. We have 5800 near the low there, and the FOMC key level is back up here near the 6605s. So if we take a look at that FOMC key level again, anytime you have that FOMC key level come in, you see the market react away from it. You find a strong pivot after that move, and then usually you come back to it. So again, that would be about 6605, 6609, somewhere in that zone. And if this pullback can withstand somewhere between 6K and 6100, then we could be looking at a push higher back toward that pivot, back toward 6700 even. Failure to hold any pullback here could be significant, and we could see another round of weakness down below. So again, we got to see how the market's going to respond here early in the new year with regards to the ES and the NQ. If you take a look at gold, gold has finally hit our target, the target that we gave back in August. That was August 16th there when we hit that low. I mentioned that it may take the entire year. This could be an end of the year play to get price to come all the way back to this pink line right there, which is 1287.60. We finally got it there late in the year, and here to begin the year, a move all the way. We also knew it would take probably every bit of that year, because it may not be a move that just goes quickly. It could be something that takes its time, and that's certainly what happened. A nice rounded bottom, a break above the 1250s has led this thing higher. And again, the last time we had a little bit of a buy signal in here was on the pullback inside the PEMA trigger zone, and that allowed for a pop higher. If we see another pullback to begin the month, you see the higher value relationship here this month, you see the PEMAs coming up to provide support, that could provide another buy opportunity again for a continuation higher. So any pullback back toward the mean could provide another buying opportunity for a continuation toward 1300. If we take a look at crude oil, you'll notice that crude oil right now looks more of the same. It really hasn't been able to find its legs at all, no support, but it did come into that 42 area. So if you take a look here at the wider time frame, you'll notice we have between 40 right here and 42 right here, and price got to 42 and change and held for now, but that's not, you know, the lower area of support. So it still has between 38 and 42 is what we talked about as an area of support that could be tested, and we could still see more weakness into that area. We got here as low as the 42.36s, and you can see right here we are holding just above 44s right now in a very narrow 4-day range. That could suggest another round of weakness down below if the 44s don't hold. Something like this where it holds for several days, and once it fails, it starts to drop. Maybe over here, when it holds for several days, when it fails, it starts to drop. So that's where we are right now. Again, failure to hold 44s could open up another round of weakness. We have between 38 and 42 as a significant area of support that could hold. And if it does, perhaps we see a bounce as high as 55s. But again, this market has not been able to string 2 days together to the upside since the major drop that began in early October. So again, failure to hold 44 could open up another round of weakness down below for crude oil. Lastly, taking a look at the YM, you'll notice that this one had a pretty good bounce here the other day. It got below the 2300 key level. That was the early lows of the year. Knocked those out here, dropping as low as 21.5, stretching back above the 2300 level, and here so far kind of testing the waters just below it. Anytime you stretch like that, again, the early pullback could be a buy for another continuation back up. We could see a move back toward 2500 here, especially if any pullback to begin the month is held, defended. That could lead to a return back to the FOMC key level and perhaps a bit higher. Failure to hold this zone opens up another major round of weakness ahead. So we will continue to see what this market does here early in January and in 2019. Thanks a lot for watching here this morning. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room.